What's up, guys? Welcome back to another episode of 0xResearch. Today I'm joined by Danny, D5K from Lightspeed fame. Danny, how you doing?
Lightspeed fame. Feeling good, doing good. How you doing, Bach?
I'm doing well as well. Still struggling with what is going on in crypto in particular because there isn't much to talk about on the podcast, but apart from that, I am doing fine overall, thankfully. Yeah, I assume you're doing well, as always.
Yeah. The yeah, as always. The industry's feeling it. I think the number of topics they're quite condensed right now. It feels like it's the same few things are sort of all the rage, and that's how you end up with 9 episodes in a row about HIP3.
Yep. That's a good segue into today's topic, I guess. I'm just kidding. We won't be doing HIP3 today, particularly because people are getting upset with me now for doing too much HIP3 stuff. I guess before we get into it, I wanted to give a big shout out or shill to the Digital Asset Summit in New York, March 24th to 26th, 2026. It is getting close. It's in a month. So if you haven't bought your ticket yet, I would recommend buying it. Well, actually, I don't know if I can recommend buying stuff, but you should look into buying it. And if you are going to buy it, you should buy it using our code 0x200. It's going to be where I would like what we're talking about with crypto kind of becoming like this smaller and smaller thing. Like industries, I guess, that go through these periods where the amount of protocols or businesses there are just dwindle down. But that's a good thing because the strong survive and they end up becoming stronger and stronger. And we will be having a lot of those strong protocols at DAS New York, March 24th, 26th, and we'll also have a lot of institutions there. So we have some pretty big names coming in. I know a few people from the SEC, few people. Actually, I think we're having some people from the Fed as well. Some big names.
Fed chair, CFTC, couple of government adjacent folks, regulators, but also funds, big institutions, big fintechs. Pretty broad coverage. It's going to be pretty amazing. I think the point you harped on, like, I don't know, I feel like I saw people talking about this last year. Yano and some others were commenting on prior DASs where retail is like kind of been feeling the pain, but like institutions and fintechs and other businesses are like very excited. So there's like that weird dichotomy going on, but this DAS, like it's incredibly stacked.
Yeah, just like to harp on that point about how institutions and fintechs are really excited is we lost the battle for cypherpunk and to like whatever consumer crypto protocols and whatnot, or like majority of it. But what we have won is the entire back end of the future of finance might actually run on blockchains, which is quite exciting. Now, I don't know, James Christoph, a friend of the pod, has a funny take on this, which is that yes, like a lot of this is going to be running on blockchains, but A, you will probably not make any money on it, or B, a lot of it is going to run on Canton, for example, who has existing banking relationships. They figured it out kind of, and that might be one of the big venues that are dominant in crypto going forward, and it might not be, I guess, like what a lot of people may have expected, which is maybe Ethereum, Solana, etc. Maybe not hyperliquid, etc. Yeah, but it is quite exciting, I guess, like in the sense that we'll talk a bit more about this, but we are going through this like super interesting period in the world, in which there is like a very clear change in human capital, which is that's being replaced by AI or by robotics. And then there's also like great improvements in financial systems, because the reason these guys want to adopt it is because of T+0 settlement, not because they believe in the decentralization. I'm sure some do. I'm sure some have like value decentralization. I think it's more a bigger thing in America because of the way that like the political culture is in America, where it's like a bit more freedom-y and a bit more like you want control of your own money. Anyway, so it is a very exciting period, and I think like DAS will be part of that exciting period as well. Like that will be what is mostly discussed. Not a lot of AI talk. So, but yeah, overall should be exciting. March 24th to 26, 0x200. Perfect. And with that, I guess, as mentioned, since we don't have tons of crypto stuff, I think what we want to talk a bit about today is kind of crypto adjacent, because Jack is very crypto adjacent, but the block layoffs. I guess, Danny, do you want to give like a short intro, or I can give a short intro and then we can kind of talk about it?
Yeah, I guess the big piece of news here is that Jack Dorsey announced Block would be laying off 40% effectively 40% of their staff today or the other day. And the stock immediately jumped like 25% in aftermarket or after hours. It's kind of funny. I saw a funny take actually about this, where it's like, imagine being Citrini and dropping that Doomer AI post about companies laying off a bunch of workers and like kind of smiling and giggling in the corner, and then it happens the next week with Block and Jack. Maybe a couple things to comment on is he followed up on this. Let me see. I'll share his tweet that he dropped as a follow-up comment, but he dropped a big post talking about the layoffs first of all, but then he also dropped some follow-up context and said, yeah, we overhired during COVID because I incorrectly built two separate company structures, Square and Cash App, rather than one. Said they kind of corrected that mid-24, but misses a bunch of the complexity they took on through lending, banking, BNPL, and other stuff. So now they're targeting, more profit per person, and to increase their efficiency, sort of like compared to pre-COVID.
Yeah.
Basically, I think there's two things happening, right? I think, and we can talk about both of these, is that there's probably still some like pre-post COVID, like plus or minus to, company employee balance sheets, if you want to call them that, just the amount of employees that were hired at some businesses, and maybe they have not, maybe those, some folks, there were a lot of layoffs in like 22 and 23, for example, but maybe they did not cut enough people. And now that we're seeing a lot of excitement and advancement around the AI tooling, it feels like maybe a good scapegoat to use as a chance to say, hey, we're going to cut a bunch more people because AI, because individual people can do a lot more work now. But also to some extent, that probably is also true, right? Like, an individual person can be much more effective now, especially in a white collar kind of job. If you're spreadsheeting and docking and, doing PowerPoints, you can be a lot more effective now with where the AI tools are at. And so I think that there's kind of like a combination of these things happening, and Square and Jack seem to be maybe like the first big case jumping on this potential opportunity.
Yeah, those figures are kind of insane, like the per person going from 500K to 2 million. Did they overhire post COVID or was it pre COVID? I think it said pre COVID, post COVID.
Yeah, I think it was a little bit of both, because he kind of explained in their scenario it was sort of like two businesses, so they were kind of hiring for two businesses, which maybe could have been like acting more like one with Square and Cash App. So they were sort of hiring for two businesses, which could have been one, but probably also hiring a bit more during COVID as well. So they kind of got like that double whammy. So he's saying they're kind of correcting for that, but also I would imagine some of this as well is maybe, being early to the, jumping on the AI is going to lead to efficiency gains, and then therefore kind of taking advantage of this moment in time to do so.
Yeah. And I guess like kind of a scary thing here is that if people see that, oh, the market is valuing like XYZ higher now because they're doing layoffs, then I imagine a lot of people might be incentivized to just also go through layoffs because they're like, oh, the market won't be scared. In fact, they'll actually appreciate it. On what you mentioned, like the spreadsheet side, and like, well, there is like probably a lot of overhiring, but in a lot of companies. I know like a lot of the time when you bring up, I don't know, the Industrial Revolution or something, people are like, oh, like it's not really comparable because this one's at a much larger scale, and probably yes, but like they're, I guess like following layoffs, my ignorant opinion is that we will probably have at least like people's lives will change, and then there will be like dramatic population changes as well, like societal stuff. But I imagine surely it all ends up okay eventually as like new industries pop up. The other thing is, yeah, just like on the first point to harp on it a bit more, maybe it is quite scary that the market's reaction is very good, because I feel like it's just going to get more and more ramped up. Like, do you know what I mean? People will look at this and just say, oh, we just need to go more and more and like deeply into it. I feel like this happens and maybe like some people also just make bad decisions and just overfire, maybe like maybe overhiring is bad, but we already talked about this morning as well, and I alluded to your one like factory or like plant example that you gave last time we talked about this, but there is actually James Christoph was talking about this. You need to have some people, you need to train some people, because there just needs to be at some point certain people to like error correct or something. Like these things will probably always make some errors, just the way that like human beings always kind of make errors, and you probably need to keep a check system, like a checks and balances system. So you need to hire to some extent, right? Or else it doesn't make any sense. So I imagine like a lot of people will try and fire everybody, for example, or just like keep 4 people, and then I imagine a lot of those go bust. And also like a lot of people who just don't adopt it at all will probably go bust. I've been doing small checks with my friend groups, and some of them are like using AI for everything. But I think most of those people are in tech and in crypto. And then the people who are actually not in tech or crypto, who I would say are like, I don't know, like they're just regular people, smart, good education, work for good companies, like white collar. Some of them just don't use AI at all to do any of their work. And I guess it was like kind of news to me, because I also don't think that their company is thinking about firing anybody because they're not using AI at all. And a lot of this is like, I know like banks, for example, they're gonna be super slow because they have tons of regulation that they have to deal with. But some of these companies aren't particularly like very well regulated. They just like are also moving super slow. So it is interesting to see kind of both sides here. And then I don't know. I think it happens slower than people expect, but also the intensity of the shift is probably a lot more than people. Like for me, I'm kind of imagining, oh, it won't be that big of a deal. I imagine I'm going to be quite shocked in 10 years. But I also think like the people who are like, oh, by 2027, you won't have a regular job, they'll also be like a little disappointed in 2027.
Yeah, I feel like you hit a lot of things. I have a lot of thoughts on a bunch of different spots, but like, the over firing kind of maybe risk to some businesses, I think is interesting. Like, I feel like we have a good example in that with probably Elon and Twitter. I feel like if you asked most users, I don't know if you asked the internal employees now, but I don't know. I think they must have had a few thousand employees prior to him taking over the business. And I know recently we've seen comments from like Nikita that they've got like 20 or 30 people there now. And the public comments from them are like, yeah, we can't make this change to like how a color looks on dark mode because there's only 20 people working here. Sorry. That's like way down on the backlog. I think that's, as a user of Twitter, and maybe others can comment on this as well. Like maybe I'm being a bit too anecdotal, but like I think the product has certainly gotten worse in the past couple of years, and they probably could have more people working on it. I mean, he bought it for 40 billion or whatever. 20 employees sounds a bit small for that size of product and how many people use the product, but I agree with you that there's a potential for some businesses to maybe overcorrect. And I saw the comment from Jack on this specifically on like why this many people at once was sort of like from a morale perspective of, if we cut 500 and then we have to cut another 500 in 6 months and then another, it's like, how does the market interpret that? How do the people within the like, does that kill morale? And everyone's like starting to start looking to jump ship like before even getting fired in the first place. Like it might really hamper the inside and outside morale around the business. So I can understand it to an extent. I think the hard part is like, how do you have a really good feel for like whether minus 40% or minus 60% or minus 80, like that's such a huge swath of workers that I think it would be pretty tough to really know whether that's the right amount. But maybe just being quick and like adaptive is the way to go, of like, minus 40%. And then maybe if we need to hire a couple hundred people back over the next, year, that's fine. And they'll kind of figure it out. They'll grow through it, but it might be better than delaying the inevitable. I could see it going either way. I think the bigger question, generally speaking, is what you said about if the market interprets this as a good thing, does it drive like other management at other large businesses with huge headcounts to say, all right, screw it. We have 200K employees. Maybe we need to cut 50K right now. And there's like a potential scenario where a bunch of companies do that all at once. And it's like, okay, you got 1 million people who now don't have work at all at the same time. That's a pretty dramatic scenario. I don't know if it will be, I don't know that it'll play out like that. I doubt, like the larger and larger that workforce size gets, it's probably not so easy to just say, hey, okay, minus 100K off the employee count, unless you're going to cut completely like a line of business that you think doesn't make sense anymore in like the new kind of shape of the economy or something. So we'll have to see. Like I'll be curious to see if other like big tech companies follow on this trend and relatively quickly or not. If they do, then maybe that means something. If they don't, then maybe this was like more of a square or a block specific problem that they needed to correct for that they didn't correct for previously. But yeah, to your point as well, like maybe just some other evidence on some folks I know who work different jobs. I've got a ton of friends in software who say that, they can speed up a lot of processes now. They can do a lot of things more quickly, but there's still like touch points where the AI is not, like, using these tools is limited because they're just still stupid about certain things. It's like if you ask it to review something and you want it to review something specific and like, don't use, this type of style when coding an app, or like make sure to avoid this type of practice. And sometimes it will still do it and you have to manually review it. And if you don't, then like your code base ends up just like turning ugly after a point in time. So like large complexity and like the growth of these things, seems like you still need like kind of individual coders who know what they're doing to manage that. But certainly for like all this one-off stuff that, high agency people, it's like, oh, I just want to make a dashboard for myself, like quick and easy. That's become super effective. And obviously for simple, like, make a quick spreadsheet for me. And like, maybe it would have taken 30 minutes to set up and now it's like one prompt. There's a lot of like those small efficiency gains that I think are bleeding through to like, maybe the slightly above average person who today might be prompting and maybe previously would have been like, okay, maybe I'll learn Python, or maybe I'll like, Google how to use code to automate some of my work processes. I think you're seeing the uptake of tools for that type of like individual.
Yeah, I think so. Two things. One is like, I don't think trust in AI is still probably where it should be to like mass lay off 40. But like, in my opinion, it's probably not where it should be to mass lay off a lot of people. I would say I use AI a lot more than regular people do. And I still like, I have to double check especially if something is like very important, I have to double check. But what it has helped me is exactly what you said. Like previously, so I learned programming on my own, and then, but a lot of it has honestly just been throughout time, me just like being, like going through Stack Overflow to figure out what I need to do. And now obviously you don't have to do that at all. Now you don't even have to. I can't remember the last time I wrote actual code. I imagine a lot of people feel that way. Like, especially I imagine you're at the same, maybe because you have a more science background than I do. Maybe you wrote more code previously, but like, I imagine you don't code anything yourself anymore. And I think like it's been really, really good for that kind of person. And we still haven't really seen like a massive negative from AI yet. And it's been like obvious, apart from the 40% of people that got fired from the block. But like, you know what I mean? Like, we haven't seen, so far it's only been like positive for this, like, I would say maybe like 30-40% of white collar workers who are like who are just like, work that would take me 8 hours now sometimes takes me 15 minutes and sometimes takes me 2 hours. It's been very good for that, but like I haven't seen anybody like completely lose their job. Maybe that's still coming. But like so far, most things have been relatively good, which is also something to kind of be happy about, I guess, a bit. But completely agreed. Like that, I'm hoping that productivity boosts are good enough that you can justify that 40% cut, because I think a lot of people are going to go for that 40% cut of like, a lot of companies will go for it. And I hope they're not overdoing it such that they won't have enough people who know the internal processes, who know what like a good quality product has to look like. Because there's a risk where it's like, let's say we're all creating, I don't know, I'm a consultant and my entire job is just creating decks, right? And then by the third generation of consultants, there might not be people who knew what like an originally good deck was supposed to look like. And now the decks are just kind of shit. The consultant's a bad example because I don't know if a lot of consultants will remain in business, but you get the gist of what I'm trying to say. Like, we're going to lose a lot of this knowledge. And I don't know, I hope enough people stay or like are hired to know what it should look like. On the positive side of AI, well, I guess also kind of negative. We've had a few raises recently. Obviously, there was the Claude one, the Anthropic one, but I guess like the bigger one is OpenAI closed their funding round at $730 billion valuation. They're raising up to 110 billion. NVIDIA and SoftBank are committing 30 billion each in 3 installments, and Amazon is investing 15 billion upfront, with 35 billion contingent on an IPO or achieving AGI, is what this article that I pulled it from says. I don't know what that looks like. I would love to see like the legal document around what AGI definition is on both of their ends. And then Microsoft didn't participate, and there's going to be more equity from sovereign wealth funds and investment firms. And they say it's like a stepstone towards an IPO. I have a friend who's recently been looking into these secondary markets, or like I guess private markets for OpenAI and Anthropic. First of all, they're mostly like SPVs, and sometimes like third layer SPVs. Then second of all, I don't know if you do OpenAI at 730 or at 850 or whatever is like the things. Would you do OpenAI at 850? for an IPO in 2026. So you're
Would I
assuming,
buy the IPO at 850 billion?
would you buy the secondary market right now?
Oh, like some wrapped SPV vehicle? No, probably not.
Let's say it's like first layer though, like you get direct access technically. Like it's not through like the third person. You're not paying whatever. Like
No one's like haircutting me, and
Yeah.
I don't know. I think there's like terms and things like, are you locked up for a certain period of time post the IPO? Like, I feel like at this point,
You're better
I
off
don't know.
buying open market.
Maybe this is the wrong view to have, but I feel like at this point, it's like if you're looking at getting in to the secondaries on something like OpenAI, you're just seeking like that one next raise or that IPO val as like your exit opportunity. I don't know, because unless we really see, here's the thing that's questionable to me is just like you'd really need to see the revenues for these companies like accelerate meaningfully. But generally speaking, like the most, exciting and like largest valuation for an IPO ever doesn't sound like a great opportunity to buy into at market. Like that sounds like, okay, you're buying the perpetual top of something for like the next 5 years. Maybe that's true, maybe it's not true. Like who knows? But I don't know, just given the raise history here, like they raised some money in October, they raised some money in November, they raised some money in December. Like it's I feel like the risk reward feels a bit skewed, not in your favor at this point. But I think that there's this problem that we've talked about where it's like there's a lack of, I don't know, there's like a lack of buy-in to like AI as businesses. I mean, you can buy the Mag 7, you could buy Nvidia if you want, but in terms of like the businesses who are actually selling the AI, there's this like lack of buy-in for, outside of these big funds and some of these big companies, I guess technically. So yeah, I don't know. It's a weird dichotomy where it's like, maybe you do want exposure to these businesses, but at the same time, are we going through that sort of like peak of overinflated expectations, and then you will actually want to buy like the winner from the wreckage and the rubble in a few years? That's hard to say. I mean, you never know. Maybe if they go for another year and a half, then maybe it IPOs at 2 trillion. I don't know. The number could be anything.
Yeah. It does feel a bit like a FOMO. Like first of all, I don't have enough experience in IPO. Second of all, I don't know anything about the way that AI businesses are going to make money. I know some are doing like advertisements, ChatGPT. Some are just doing like trying to go mass market, $7 subscription, very low rates. We just get as many sales as possible. So enterprise deals, Claude is like very expensive per token. There's different ways to do it. Whatever. I haven't looked at any of the financials. It does feel a bit FOMO. Like it feels like the type of thing that, I don't know. It feels FOMO-y. Certainly, it feels FOMO-y. Like doing an $850 billion round. Oh no, it's $730 billion round.
If you assume I guess if you just assume that the numbers like kind of quoted around, they're gonna target a 1 trillion valuation for an IPO, and maybe that's like 6 to 12 months out. I don't know, just like doing the math, does buying at 730 billion and then targeting a $1 trillion IPO, and then like what's your lock? Is there a lockup, and like do you have fees on top of that? I don't know. Does the math make sense? I think there's some specifics that are required to even like do the math there, but it feels kind of thin is maybe my point.
Yeah. And there's also like a few things that like I think the thing about OpenAI was that they're growing at like really insane numbers, right? But eventually they're not going to be able to grow at that many. It logically makes sense. You can't grow infinitely. And then apart from that, there's kind of from my understanding, there's a limit purely due to compute and energy. Like they're going to eventually hit a ceiling where their growth is slower and slower and slower. That kind of stuff you need to consider. I'm not sure. I just saw it and I thought it was ridiculous. The more interesting thing that I want to chat about is this is that thing that Srini talked about. I think it's like one of his Twitter articles. A lot of things of Srini getting discussed more and more, but the social contract being broken with regard to public equities, and I think the amount of price discovery that has happened, like off public markets, for realistically, like you should always feel relatively excited to be able to buy something at like a private market valuation. Like that's the whole point of private markets. Like I don't know, if ChatGPT was, or if OpenAI was like $200 billion, I would be really excited to buy it, right? But if it's like at a point where it might IPO at 2 trillion, you know, like all of the price discovery's already happened. Secondary market, it's just SoftBank's just shipping in $30 billion a year into it somehow. And then, you know, like it's not as exciting as it should be. And it's like this broader thing of like more and more of this is happening. I don't know what it's like I know it's like a general thing, like Stripe is a big one, although maybe that's a good thing because they're gonna get, or like they had, so there was some payments thing that posts the Trini article, the payment stuff, all kind of crashed, like Amex crashed. So yeah, I think it like speaks to that a little bit more broadly as well. Like, I don't know, it's a bit crazy that you can't buy this thing easily without like getting some of these SPV things, because I like every once in a while get super interested in it, and I was like, you know what, I'll look into it. Like third layer SPV, and I'm losing 15% overall on like the initial haircut, and then there's like also if I profit, there's a haircut. I'm losing quite a bit off my profit. It's just a stupid thing to do.
Yeah, it's a weird dynamic because it feels like the practice previously used to be once you got to a certain size, you kind of just, I don't know, there was just sort of an expectation that you would go public as a business. But now it's like, it doesn't matter how big you are as a private company. Some of the biggest companies in the world now are private companies, technically speaking, based on, you know, their private valuations to most recent raises. Like OpenAI at 730 billion is like, that's a massive company. So yeah, to your point, it's very strange that you have some of these like incredibly massive private companies that can't be invested in just normally through the public equity markets. And I mean, there's a lot of factors there, right? Like there's so much money floating around in the private markets that it's like, it's very easy for them to get capital. That isn't to say that there isn't a lot of money in the public markets. There is too, but I think it comes along with, you know, you don't have to do as much disclosures. You don't have to do as much like financial reporting. So some of that, like maybe headache, but also like employee count, like you don't need to maybe hire a bunch of extra, you know, accounting and financial folks to run all of that stuff for your regular reporting, for being a public company. Yeah, it's like that compounded with just, there's just so much money out there, that it's made sense to basically just stay private and just keep doing rounds after round after round. Like there are companies doing like Series K, like they're getting all the way through the alphabet at this point. Like I would not be surprised. It would not be crazy to me that we see Series Z rounds in a few years' time if the trend continues and they just like continue to stay private.
Yeah.
But yeah, I do agree with that viewpoint that, or that piece that Citrini put out, that it's very strange that, I don't know, that just like the average investor cannot like normally buy into businesses that otherwise like you would have been able to do so, and kind of like have buy-in to the success of like the future economy, if you want to call it that, right? You could invest in Amazon and Google and all of the like, you know, giants today, the Mag 7, you could invest in all of them in like the 80s and the 90s at kind of like, you know, modest valuations relative to like other major mega caps at that time. And now you can't really do this for the most part. You got to wait for the massive IPO valuation, the inevitable like kind of drawdown and pullback and like cool off period, and then maybe you make the decision to buy in after that.
Yeah, it's my God-given right to buy the AI bubble, and they're making it very difficult for me to do so. You know, my father had the opportunity to buy the .com bubble, and now I don't have the opportunity to buy the AI bubble. That's really messed up. One thing I wanted to mention in the previous one specifically is I actually haven't seen, and this is something I feel like not a lot of people discuss, but is the amount, like how much easier, because you mentioned accountants, and I was like, why would OpenAI hire more than like 2 accountants? Because they're just going to have like whatever ChatGPT figure it out. There should technically be more and more companies launching, right? Purely because you now don't have to have like legal, as at a small company level, you don't need to have legal, accounting, and then whatever marketing, etc. You can just kind of be like a 2-person thing. And I feel like this was touted a lot from, so the way that AI companies presented themselves have changed a lot as well. Like previously, they very much were like, oh, we're gonna see like a unicorn with only 1 employee soon, and now it's like, oh, we're gonna make sure everybody's unemployed and no one is going to be able to make money, and we're going back to neo-feudalism, or we're going to neo-feudalism. I haven't seen, and I'm sure like somebody will correct me on this at some point, and they'll say, oh, we actually have seen it, but I haven't seen a massive uptick or any data regarding a massive uptick in company formations, or like new businesses created. Like I feel like Shopify was really big for this, right? Or like whatever other, or like website creators, etc. Versus, and the internet, obviously, massive uptick in new businesses. But I haven't seen, maybe it's too soon, and we're gonna see it soon. But like as something that is meant to replace quite a bit of the workforce in terms of marketing, accountancy, lawyers, etc. Like a lot of these white collar jobs that maybe is a bit prohibitive for people to start businesses before just hasn't worked yet. Like technically we have AI and we have the internet. You don't need storage space like you don't need store space to sell things anymore. We have the internet, and you don't need a lot of workers. We have AI. Like unless it's a super heavy industry, you should just be able to, like if you're an entrepreneur, you should be able to start a lot more businesses. And we just haven't seen that uptick at all. This was another positive, I guess a negative thing that I was going to mention before, but I forgot about it.
I haven't seen that uptick since when?
I don't know. I just haven't like seen any mentions in any newsletters, any AI related newsletters, any macro related newsletters, any tweets, any like I feel like if we were, because people are always trying to find are you seeing something now and you're just going to be like, actually we've seen XYZ, or no? I just haven't seen any data points on it.
Yeah, no, I was just gonna say I think one, like the majority of like new businesses and obviously small businesses are gonna be privately owned, and so maybe part of that trend is like you don't like see a lot of new businesses, one because of the trend that we're seeing with staying private versus going public. So like the number of like publicly listed businesses is, I think it's been shrinking. I'd need to go check the data on there, but I think there used to be a larger number there. But I do think there has been, probably in the last 2 decades, an explosion in like new private businesses because, the rise of like you mentioned, software based companies, like basically online internet businesses. There's been a ton of those and an uptick of those, and like, anybody can make a little store on Shopify, or like, the millionth SaaS product. There's tons of those. But yeah, to your point, like on the public side, we aren't really seeing it on the public side. But that goes back to that same trend of just companies staying private.
Yeah, that makes sense. Okay, last up, we have a sadder story. The Axiom. Were you surprised about this?
This is the big crypto news this week. We talked about AI, and now we get to finally talk about crypto.
Finally, crypto. Were you surprised? Okay. Background for listeners. A senior BD employee at Axiom allegedly abused access to internal tools to look up user details, such as wallets and referral codes, and used that to insider trade by tracking private wallet activity in early 2025. There was a leaked call about it where he talked about this is one thing in crypto that I find super funny. Every time there's like oh, like this guy stole, I don't know, $47 million from somebody, and it's just like they've recorded a Discord call of themselves doing this. And there's like Zach XPD just, it's so funny to me that like the moment that people steal money in crypto, they're just like go online and they're recording themselves talking about it. Anyway, stole money. I think he was tracking KOLs and he had a Google sheet of wallet addresses. To be honest with you, I am not particularly surprised. Like, I think this just means that Axiom didn't pay its employees enough money, or it just means that like this person was a bad person. Because Axiom, they were bringing in a lot of money. What was the figure? It was like $180 million in 6 months, right? Like back then when we look at something around those numbers. I can't imagine it's a very big team. If you have team members that are resorting to insider trade, I don't know. It's either a morality issue at like the BD guy, which probably is, or like if you're making enough money, I don't know if you want to insider trade. It's a massive risk. I don't know if you want to insider trade and publicize it in any case. You know what I mean?
Yeah, I think part of it was so basically the guy had access to addresses associated with accounts created in Axiom that maybe otherwise you would not be able to so easily link a bunch of wallet addresses together. So you could take, like, the classic example would be like if you knew every single one of Frank DeGod's addresses, then if he buys something on like a wallet that's not tracked by anybody, or like nobody knows that it's his address, but then he buys it later on his main one that people kind of track. You could insert anybody here, insert Orangey, or you're like, whoever on CT. Then supposedly all the people following the wall, the address are gonna then buy in and like kind of follow him into it and pump the price. And so if he could exploit that gap in info to make money consistently by trading against that information. I think there's probably a few things, like one, the fact that everyone at Axiom had access to that info was probably just a controls issue, like just an oversight. They just probably didn't all need to be able to see that. So that's one thing. Two, like, who knows? Was just this guy they hired like I don't know. You could say this about any business, but we've had cases of insider trading in the past at OpenSea, at even Coinbase, and it's like, is it a problem with the entire business, or like did they just hire one guy who like got a little too excited about the money that they could make? You might have a good point about how much they're paying. Like, I don't know, maybe they weren't paying him that much for the work that he was doing, but it feels unlikely. I mean, just given they came out of YC and they were like one of the fastest apps ever to get to 100 mil in revenue. So I would find it pretty surprising if he was like being underpaid in a business, in a role like that. So I don't know. It could be a one-off thing. Maybe it's not. We'll see. They responded. Axiom responded. The CEO responded with a note just saying like, we've modified access controls to some of that information, and we're reviewing the situation. So who knows? But it's not a good look. It's a terrible look.
It's definitely not a good look for, because you. So this is, I guess, like kind of a crypto problem anyway. But when you trade on a wallet, or when you trade through an interface or a terminal, you assume that your order flow is being sold to an extent, but you assume that it's not being sold to a malicious extent, and you assume that it's like a commercial relationship that at least slightly benefits you, right? Like maybe a validator is going to include your transaction in their block, and this is good for the validator, but it's not a negative to you. I don't know if technically, like, if people just following you and tracking your wallet, it's definitely illegal, but I don't know if it's like a negative to you. But on the other hand, I don't think you assume that people are using your wallets to make money, and it's a massive privacy issue. The access thing is that I always thought that they would be like a team of 10. So, and if you're a team of 10, you know everybody. You don't need to have access, right? Like, I guess there needs to be privacy stuff, but I guess I didn't assume that they would have like, I don't know, 5 BD people. I thought they would have 2 BD people. I don't know, like majority is engineering. They have one marketing person and then one whatever, insert security or finance or legal or whatever, like somebody who covers that stuff. I guess their team is a lot larger than before than I assumed, and they need to have access things. But either way, like I think it's not a good look on, unfortunately, on the Axiom side. You never want to like feel like your privacy is being taken advantage of, your data is being taken advantage of, without benefiting you, obviously. And sometimes like it can benefit you, like if you're getting better fills, because they're selling your order flow. But I don't know. It's another thing is that I think nobody really assumes that a lot of meme coin people are super, like a lot of the meme coin teams are super ethical, not in a bad way. Then you kind of got no. He faded into the back. Oh, there we go. I don't know if like, I don't know. Do you assume trading terminals people are super ethical people? Probably not. So like maybe that's why people weren't really shocked.
Like operating the business, you mean? Like
Yeah.
who run them?
I guess I assumed Axiom would have been a bit more ethical because they're like a relatively big name.
Yeah, like I think in their case, I don't know. It's being YC backed. Like that almost feels like a stain there as well. Like that's here's what I'd say is there was some pretty solid like positive coverage of them early on in their like growth upswing. And some of that was like, yeah, YC knocked it out of the park with another crypto startup and they're like going crazy. So I guess just maybe a bit disappointing from that perspective. Not that like being YC backed means that you won't ever have like fraud or something like that associated with a business that comes up through your cohorts. Because people are people.
Yeah.
You can only do so much there. I think not that this excuses anything, but that the guy, the BD dude, is clearly very young. And I think the entirety of the Axiom team also clearly very young. I think same for a lot of like, you know, Pump team is very young. There's lots of like teams in the space who maybe they just like don't have a figure within the business who is like willing to provide that harsh perspective of like, okay, we can never like XYZ thing, you can never do that. If you do that, you're fired immediately. Like you're gone from the company. I don't know that like that type of thinking has been implanted in some of these people's minds. Especially with just like within the meme coin trading space, the things that are normalized are like rugging and like bundling and dumping things on other people. And so I don't know, this guy, whoever he is, might have just assumed that like, oh, I can just do this. Like we have the info. This is like free money for me.
Yeah.
And again, I'm not saying I'm excusing what he's doing, but I think he might actually believe in the same way that there's people who like look at prediction markets generally speaking and say like, you know, it's not insider trading. It's they're just making use of the informational advantage they have to make the markets more efficient in all cases. This guy might have actually believed that what he was doing was not wrong, which is probably objectively worse than like if he knew what he was doing was wrong and he was doing it. It's like I understand there's some bad apples. There's bad apples exist, and you just when you find out you correct it. But if he didn't even think or know what he was doing was wrong, then like you might have like a core cultural problem going on. Of like these people don't even understand like the difference between right and wrong in your business, and that's like much more difficult, I think, to correct for.
Yeah, I think that's a good point. I like the prediction market example because we just thought about this in the 0xResearch chat the other week, where it's like, somebody kept saying like, "Oh, it's not insider trading because it's like not stocks or something. Like commodities can't have insider trading or something." It's like that's not really the thing though. Like that's not, first of all, that's not going to hold up in court when some of these things actually go to trial, maybe at some point. And yeah, like you said, like these guys don't even. This did happen in meme coins. I think it got more. Previously, it was like nobody really calls things pumps and dumps anymore. Like previously, it used to be like, oh, this guy like PND'd, but now it's like, oh, it's just like game is game.
Now it's like it's like
not.
It's like a it's like an accepted part of the industry, almost like, yeah, we're making an app that's explicitly around like pumping up in coins and like selling them onto your followers, which I don't know, maybe maybe it makes sense, maybe it doesn't make sense. I do think, to the point around the prediction market thing, it's like we're having like a technical debate around like the terminology of like, oh, it's not insider trading because like that's not actually a classification according to the CFTC or whoever. But I think more so, like, if you point to examples of like sports books, for example, if an NFL player bets on a market involving them and then they like throw the game or they like do more or less effort or something, if they impact that market, people get cracked down on for stuff like that. They get fined. They get like kicked from the org that they're on.
Yeah,
like we understand generally like that's like not an accepted practice for things. So it's just interesting to see that when it comes to some of the prediction market conversations, like I don't know, there's this more collective view that shouldn't apply for some reason, which I don't understand.
Well, I think it's now the narrative that is being pushed. I also really hate the argument that is like, oh, it's really good for a lot of people because it like it makes insider knowledge more transparent. And to me, that's not like, first of all, it's done that like a handful of times, and sometimes these things are just wrong and are just gambling things. But on the other hand, I don't know if that is a very good argument.
Yeah, I think to me it feels like an implicit, like I've heard that argument and I like understand it to an extent of like, yeah, there's like a giving up factor of, yeah, we know that there are insiders who do exploit the law and make money, but now that we can see them trade the markets more easily, everyone else can profit on it too. But I don't know that that's like the logical conclusion that comes from that. It's more like, okay, if we know that there are insiders that are doing things that are illegal in the first place, we probably should prevent them from, stop them from doing that in the egregious cases, and not just like say, oh, well, now that it trickles down to everyone else, like now it's fine.
I never really, I don't know.
It's very hard to police, right? It's always going to be very hard to like catch those things.
Yeah, I think in 2 years or in 1 year, a lot of the opinions on meme coins and prediction markets and whatnot will change, purely as, I don't know, some people go to jail, maybe. We'll see. Or nobody goes to jail. And then people just suddenly develop better morals. But we'll find out.
It actually I don't know if you saw this, but SBF has been tweeting from his account recently, and I've muted him because it's annoying me, but I saw that Senator Cynthia Lummis responded to, or like quote tweeted at him and was like, actually, based on the regulations and rules that we're putting in place for the Genius Act, you would have gone to jail for a much longer period of time. So you should actually just shut the hell up, which I thought was a pretty funny and based response coming from her. But yeah, we'll see. I mean, are we going to end up with some folks in prison from some more fraud? TBD.
I don't know. It's never really. We'll find out. I'm not a betting man. I guess before we end things off, I want to give a really quick shout out to my favorite analyst of the week, Carlos. And then I also wanted to say that DAS New York is, we already gave you guys a show, March 24th to 26th.
DAS NYC, March 24th through the 26th. Bach won't be there. I'll be there. Come out and see me. I'll represent both 0x and Lightspeed in one conference. Super excited to see you guys out there. Most stacked Blockworks conference ever in the history of the entire world until the next one after this. We're going to have folks from the SEC, CFTC, BlackRock, Tether, like Binance.
Everyone's going to be
there.
Name it.
Everyone's going to be there. Noah's going to be there. Is he not going to be there?
No, he will. Noah will be there as well.
Okay, Noah will be there. Pick your other favorite folks from the Multicoin is going to be there. Just throwing names out at this point, but come out, get your tickets. 0x200, get $200 off. Carlos will be there, our analyst of the week.
Carlos will be there, my favorite analyst of the
Carlos will
month.
be there.
Shout out, Carlos. Very good. Okay. Sorry, Danny, I just kind of.
No, I was done. That's it.
Okay, perfect. Thanks for listening, guys. And I wish you all a happy weekend and health and success and joy.
Thanks for tuning in. We'll see you next week.